Morning all. I'm late. How are we all doing? Sorry, I had one of those mornings this morning. Morning Ian, Kennelly, Neo, Gregors, Danny, Amy, JC, Virginia, Mark, Christian, Day Trader, Peter, Cyril, it's time, Monkey, Post, how are we doing? My carbon monoxide alarm went off this morning at about 5 o'clock. So we were like, what's that beeping noise? Yeah, carbon monoxide alarm. So had a bit of a hectic morning this morning. Turns out it's basically reached its end of life. Unbeknownst to me, every 7 years, your carbon monoxide alarm reaches end of life, and it continuously beeps every 60 seconds to tell you it's dead. However, unless you look that up online, you will think you're being poisoned. So that was a fun morning. Morning, Dion. Yeah, so market's about to open, literally in 2 minutes. So out of the DAX, out of the Aussie dollar, US dollar this morning, we had a pullback. I got out of everything basically and flat. So it's paid me nicely. I've taken 3 profits off of it already. So I've just closed out the remainder of the position this morning for about 0.3, third of a percent. So yeah, close that one out. So I've literally got 2 trades left. So I am looking for the Swiss franc to drop, the US to rise, the CAD to drop, and the euro to pump. That is my preferred next 48 hours. Then I can get flat for Christmas and I'm done, which would be great. But we'll see what happens. There's a lot of ADRs today. So as you can see, the yen has gone mental. We'll have a look at that in a minute. But let's start off with looking at the DAX. So the DAX, basically, we were gap down. We've just basically filled the gap, pretty much. So gap, ignore. We're pretty much done on the gap. So again, yesterday, another massive up day yesterday on this DAX. It's not stopping. Crazy parabolic move. It has pulled back from that rally. That is a beautiful finish to a bull run. Lovely big shooting star at the top. So possibly this is your peak formation low and we're going to drop and do a profit take from here. So there's your opening range, your pre-market opening range 15. Very, very tight this morning. I doubt I got onto that this morning. It looks too tight to me. Oh no, I am. I'm on. 142 on a 125. So I'm long the DAX. Don't really want to be long. It looks like it's coming down. But anyway, I'm long. It's broken. I used a wider entry today, offset. So I used a 5-point offset instead of a 3, because I've noticed myself getting tagged into many trades with a 3-point. And today, obviously, it doesn't matter. It's tagged me into 5 because it's moved up about 7. So, yeah, I've just adjusted that. So slightly wider hedge, basically, which means that the TP has got to be 2.5 times the range, roughly, because I'm getting in almost about 0.4 of an R, basically, into the trades now. So yeah, long on that. But yeah, I mean, massive moves, obviously, on this thing so far this month and obviously last month. So we're looking for a pullback. There's 2 legs gone in now, obviously. So I've got the fib drawn from that low. We gapped up and we didn't stop. So there's my fib, basically, up to that high and down to that low. So a shallow pullback, i.e. a flag, would look at about a 23 retracement, which is there. A 38 retracement, which is a normal pullback. You'd be looking into that balance. Then we've got 50% retracement is in the middle of that leg. And then a 61.8 to 71.9 is back into that balance there. So there's multiple points it will pull back into potentially if it is going to pull back. So we've got 1, 2, 3 potential legs. We're looking for a pullback, basically, but we'll see. It doesn't seem to be stopping at the moment, does it? So upsides today, obviously, yesterday's high is your upside target today, which is also ADR. The downside target today, you're looking at yesterday's low, which is just shy of ADR today. You've got the previous day's high there as well, but that doesn't look particularly valid because it's kind of chopped around there and then gone from it. So I wouldn't really look at that particularly. So yesterday's low, basically, and yesterday's high. So it's really ADR to the upside and ADR to the downside. Looking at the news today, we've got the Swiss franc reserves, which have just been released at the market open. Obviously, as you can see, doesn't seem to have done an awful lot. News-wise today, we've got unemployment claims at 1:30. Apart from that, there isn't an awful lot. So that's pretty much it today, 1:30 this afternoon. Unemployment claims. The employment change was down, so less people employed. So you would expect unemployment claims potentially to be a positive number today, which will be negative. So it's a negative there. We would expect probably a negative result today. So we'll see if we get any movement off the US on that. We didn't get a massive amount at all yesterday. Bank of Canada rate yesterday hardly did anything either. So I'm not expecting big things today because the market's probably just going to want to do a little bit of a rotation and wait until we get the unemployment rate on the US tomorrow afternoon. So I'm not expecting massive moves today. However, we will look at the yen in a minute because obviously that has gone mental. So there's your initial cash balance going in. We've got 1 minute to go on this candle. Not particularly quick open today. Not very big range either. Looking at 22. So about 20% of range gone in there. Not bad, is it? But not gone anywhere yet. So we'll see if we're going to continue this bull run. Or not. All going a bit mental at the moment, isn't it? Morning, Dev. Morning, Peter. I thought the blue dotted line is profit take on the DAX. Then realise it's Fibonacci. No, it's not. The blue dotted line is on here is the previous day's highs and lows. That's what the blue dotted line is. That one there is yesterday's high. That one there is yesterday's low. You can't really see it because my TP's there. That one there is the previous day's high. And that one there is the previous day's low. So always looking on indices at what we did yesterday and what we did the day before. Because the day before is also relevant. If you've got an inside bar, you want to know where the yesterday's highs and lows are. If it's pushed up, pulled back, and then the next day it pushed up and used that as a support resistance, you want to know about it. So you only really need to pay attention to the previous couple of days intraday, which is why those lines are on there. DAX is going nowhere at the moment. Looking bearish. So there's your 5-minute opening range. So if you're trading the opening range breakout strategy with the opening range breakout EA, that is your opening range. We just double bottomed on that. So we're inside bar at the minute. Not gone anywhere. So just a big, nice opening range. We'll look for clues on that in a minute. Morning, Lippy. I meant that you showed Fibonacci on the DAX from down to top. Oh, this line, that's black. That line might look blue, but it's black. That's the line you're talking about. Yeah, so that's a fib. So yeah, we'll see where we go today. Obviously, there's two levels you can look at on this. We've got that level there. You could also just look at the last leg for a pullback as well, which is going to be assuming that we are going to put another leg in on a Santa rally. So if we're going to continue and go up, we're looking for either a flag, which is a 23, or we're looking for a shallow pullback into propulsion, or we're looking for some deeper pullback into the initial propulsion move that broke that balance there. So Something like that. Not going anywhere at the moment, though, is it? Right, let's have a look at FX and where we are, because the DAX is not doing anything. So, yeah, I've got drawdown on those two at the minute, just waiting for them to do something. Not doing anything at the moment. Kind of think I might be holding these into January the way they're going at the minute. We have got, obviously, unemployment rate coming. I was hoping the CAD was going to move yesterday. We didn't get any movement on that CAD yesterday. So we had the rate come out on the CAD at 5. Didn't do anything. So let's just have a quick look through the news because I haven't looked through this yet. And let's just see if there's any yen news. Some OPEC came out later yesterday afternoon. OPEC may consider extra measures to steady the oil market. Interesting. JP Morgan CEO, I'm deeply opposed to crypto. Not surprised. Bonds, Australian trade balance. Right, Bank of Japan achieving 2% trend inflation can be defined as a state where the economy, void of new shocks, can see inflation sustained around 2%. Blah 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 blah. Just seeing if there's anything about anything of interest. Bank of England come out this morning to cut the bank rate to 5% in Q3 2024. So again, Bank of England coming out saying that they are going to reduce rates next year, confirmed Q3, which is way slower than everybody else. They're going to hold 5.25 through to Q2 2024. So that would remain bullish for the pound, having a slight reaction to that this morning. Nothing particularly exciting. German numbers. So there isn't anything about the yen. So if we look at the ADRs today, obviously every single yen pair, 150 ADR, bar the Aussie yen. That's the only one that hasn't moved 150 ADR. So this yen this morning, massive power up on the yen. So everything coming down really, really fast. No particular reason for this. Nothing in the news. It's just the yen going mental. So just don't get in the way of this one. Potentially this is going to continue. Why is that? What did he say? I just need to digest what he said. Whether to keep the interest rate at 0 or move to 0.1, and at what pace short-term rates will be hiked after ending the negative policy rate will depend on economic and financial development. So basically, this is Ueda coming out and saying they're going to end negative interest rates. So the Japanese have been running for the last sort of 6, nearly 7 years now, a negative 0.1 interest rate, which hasn't changed for 6 years, 7 years, however long it is. So what they're basically saying is we are going to come out of negative rates and we're going to fall in line with the rest of the world and start using interest rates to control inflation. Which means that they will be liquidating a lot of the overseas assets that they hold in bonds and other stocks, which is how they generally tend to manipulate the yen and manipulate their economy. So they invest overseas where they make a load of money, and then they liquidate that to buy the yen, which rallies the yen, which is how we get those intervention moves in the yen. The only country that does it. So basically, this looks like a market reaction to, or rather the market reading into what has been said, that they are going to increase interest rates from negative 0.1 back to either 0 or to positive 0.1. Which is what he said here. Hasn't given any time scale. Yeah. And the Japanese are notorious for promising stuff and not delivering it, which is why the yen can be quite a volatile thing to trade. So they're not actually saying when. So this is basically just a market reaction saying, okay, looks like we need to buy the yen now because they're going to increase their interest rates. Don't forget, though, their interest rates are going up to either 0 or 0.1, which is still 4 to 5% lower than the rest of the world. The rest of the world is sitting at the moment between 4s and 5s. Yeah. Apart from Swiss, never do. So yeah, going up to 0, great. That's still way worse than everybody else's. So you're still better off having your money elsewhere. but market seems to like it. Hedged on the DAX. So yeah, we'll see what the market makes of that. I suspect we'll probably get something like that by, well, in this case, it's sell the rumor, buy the news. Yeah, they said that. When's it going to happen? If they come out now and say at some point in 2024, this will just go straight back up there, because there's no point in buying it now in the hope that they might do something within the next 12 months. Pointless. It's not a long-term investment, is it? So this might be an overreaction. So if you fancy it, it would be a good reversal, because if it is one of those, buy the rumor, sell the news type moves, or in this case, sell the rumor, buy the news type moves, you're going to get a V-shaped recovery, which means that you'll get 150 ADR in the opposite direction usually over 24, 48 hours. However, it might not be. So I'm not really interested in taking anything like this before Christmas. Worst case scenario, you get at least a flag or a 38 retracement on it. So you'll be looking for that propulsion gap. But that is all you've got on the ADRs today. Everything extended on the ends. Why the market is reacting quite so aggressively to it, I'm not too sure. But probably the best thing to do, I would say, is to look at each individual pair. Swiss yen 175. So Swiss is the first one to get to 175. The best thing to do is to look for decent support resistance areas and wait for reversal alerts to form at those areas, so that you've got some buyers on your side to help you in that pullback. Don't just get in necessarily because you get a reversal alert. If this is going to continue, we could see ourselves at 200 plus ADR today. Not quite sure why it's reacting quite so aggressively to this, but it is. So, yeah. So watch for support resistance bounces. Like there, for example, we're at a weekly support here. Euro yen 125. We're at a weekly support here. So we bounced off that weekly support. We've now gone through it again. If we get a reversal alert there, you know that they're buying support. So that might be a good one to take. But I wouldn't just take it because it's just extended today. I would take it because there's confluence of a level. It's not bad. I mean, look at the pullback. I mean, you're going to get a pullback on it. It's just a case of when. We don't know how far it's going to drop, do we? So a bit of a tricky one to take today. So there's your Aussies, all your yens. They're all massively extended. So they're all good mean reversion opportunities. But standing in front of steam trains is not always a good idea. So be careful. I'm not quite sure why this reaction is so big. We might get something come out this morning. Japan's 10-year yield ended a 3-day fall on Thursday, rising. Keep your eyes peeled on the news. We might get something else come out about that today. Right. So that's the ADRs. RSIs today, there's quite a few extensions. So as you can see, there's no point in going through these. They're all the same. It's the yens. They're all extended because that massive yen move. So again, mean reversion opportunities on all of these. I'm not trading the yen at the moment. The EA's turned off on the yen because I was expecting it to do this. Not really because of that reason, just because it's been absolutely slammed, as we know, for a long, long time. This thing is due a mother of all pullbacks, as the indices are at the moment. So, yeah, short only on the yen, but not just before Christmas. So those are all extended to the downside. As you can see on the hourly charts, everything extended to the downside. High probability of a bounce play. So you've got an extension there, extension there, extension there, extension there. You are extended. Yeah, so just looking for that mean reversion play off the back of that. So wait for a reverse alert, wait for some signs of buyers to enter, get in, but be aware this is obviously a very, very strong move today. So so there's no point in looking at all those because they're exactly the same as the ADRs. Great example of why you do not run the ADR reversal strategy and the RSI strategy together. Pick one or the other because they will both trigger the same trades. most of the time. When you get an ADR hit, you will often get an RSI hit. Or when you get an RSI hit, quite often it's because of a strong intraday move, which gives you an ADR reversal. So they're both mean reversion strategies. The reason I give multiple ones in the bootcamp is to give you a choice, not necessarily to trade every single one of them. They're going to get you in the same positions. The others we've got on the RSI are Aussie dollar Swiss. That's a 4-hour RSI extension to the downside. Just come out of extension now. Nice W pattern forming there at monthly support. So this is a previous monthly level. Yeah. And that low there. So this area here, monthly. Tapped into it, bounced. We've tapped into it. We're rejecting it again. Just about to get a reversal on the 4-hour. So these Australian dollar pairs obviously have been dropping off the back of the CPI numbers. Sorry, not the CPI numbers, the inflation figure. That's the same thing. The interest rate number from Tuesday. So this is obviously just the pullback that we're seeing off the back of that drop from Tuesday, which is there. So Aussie dollar yen, that's extended, obviously, we know. Aussie dollar New Zealand, actually looking at that. Yeah, we've just gone straight through that monthly. So this area here is a potential decent support resistance where we are right now. So you'd be looking for exactly the same as this, like boing. You're looking for that, basically. So don't expect much more than that if this is going to continue to trend to the downside now. So that one's extended on the 4 as well. Aussie New Zealand, that is still extended. This has been extended and embedded now for a week and a bit. I got out of this last week because we had negative news, and then we had the obviously more negative news. But it looks like it's pulling back now. You're coming up into resistance there, so there's not a lot of room on this. You would have need to have taken this one yesterday, ideally down here. But when did this get extended first time? So that was your H4 extension initially down there. So might be in 3, in which case you're probably coming back to break even at the moment. So watch this level here and watch somewhere around that level. So that propulsion gap, basically, we'll be looking for a continuation out of that if you're long. Euro Swiss extended on the 4-hour, so that one's extended again. We almost got back down below that 20 level. I got out of this one off the back of this Euro news. Didn't look good for it. I just wanted out, and I did, and I'm very glad I did. So we are now pulling back down into support. So this is not a bad looking level. Pound yen 175 ADR. So double bottom bounce underway at the moment. So we've had a little bit of a reaction there, and now we're pulling back slightly. So on the lower time frame, we're forming a W pattern. Very weak W, but it is there. Yeah. So we're looking for the retest of that reversal alert, basically, to form buy at that support. If that support fails, you're stuffed, basically. There's nowhere to go. Yeah, I mean, it's obviously New Zealand yen weekly range hit. We've got this little orange line down here that I've drawn in on that very, very, very low. So that is your all-time low Euro Swiss. That is here, look, this orange line. So you are basically at this monthly low, and that is your kind of all-time low. If that breaks, there's just nothing below. So it's look out below, basically. Euro's not good. Their interest rate is coming down faster, I think, than people realize. Inflation target is 2. We're on 2.4. Interest rate is 2.5% higher than it should be. And if that comes down at that rate again next quarter, we are going negative. They need to drop this fast. The market knows that. So be wary of any longs on the euros. I'm long on one at the moment. Wish I wasn't, to be honest. It's not in a lot of problem at the moment. I'm 4.6% up on the month, so I can close out, but I'm going to hold it for the moment. I'm looking for some kind of bounce on it. So, but that is extended. Euro yen is extended. We know we've looked at that one already. Euro US dollar also extended to the downside. Again, looking for a pullback on this before the next leg down. So that one's, I'm looking at a daily. So that one's just about extended to the downside. So looking for that pullback, continuation. And pound yen, again, another yen pair, but these are all going to get massively extended. All of these yens, huge moves. If you can get, I mean, all of these yen plays, even before Christmas, if we can get a continuation on these and it just melts down to these sorts of levels, I would be happy to take that before Christmas, because there's no way you're going to hold that without getting a pullback on it. So, but right now, I'd be very wary about getting into these. They might work, they might not. If they don't work, you just don't want to be super exposed for the next 2 weeks. DAX, so far, we've broken to the downside. Lots of wicks to the downside, though. So lots of buying. No real movement today. So yesterday's DAX, I got out with a loss on yesterday on the DAX. The other three pairs, nice profit. So overall, the day was a profit yesterday, quite a nice profit. But couldn't get out of the DAX yesterday because it just didn't stop. Glad I did, because New York propelled it way beyond ADR yesterday. We got, was it 125? We got 195 yesterday. So very big move on the DAX yesterday. But potentially this is an exhaustion move. So on the DAX, obviously hedged at the moment. Target-wise, obviously yesterday's high is the ultimate target today, which is ADR. So if we push, I mean, there's no volume at the moment. So if we are just doing this today, I would probably be looking, I think probably 3R, to see if we can get some reaction at that high, which is that propulsion gap basically. So we accumulated, dropped, retested, added shorts, retested, added shorts, added shorts, added shorts, added shorts. So we know that that area there where we bounced and accumulated, this is where the sellers are sitting at the moment. So if we go into a really slow rotation today, I'll be looking at 3R for an exit. But if this suddenly goes bang, 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 probably going to see what happens at this level, because I don't want another one of these. So which meaning I want to be getting out somewhere up here or possibly even higher today. Downside, it's very much the same thing. You've got yesterday's low here, which is this area, as you can't see, it's behind my head. This area here, itchy nose, accumulation. Yeah, that's yesterday's low, which is basically where we finished the day before. So that is the previous day's high. That is yesterday's low. So this whole area of accumulation here to the downside, you're probably going to find we buy, because that's where we did the buying yesterday. Anybody that's long on this and trying to stay long will be adding to their positions there. So we're battling basically at the moment between roughly 3R to the upside, anywhere in here, which is quite a big zone, but there's no obvious level. That high there, which is 3R to the downside, again, potentially might act as support. So if we are really slow and sluggish today, an hour and a half into market, we are sitting similar sorts of levels and we just kind of grind like this, I will probably exit there and here and see if we can get a tiny pullback just to get a break even out of it, because it's not going anywhere. If it suddenly comes to life and we get an aggressive move, and we get a big candle go in, yeah, then, you know, we sort of accelerate like this, then I will probably want to wait and see what happens at yesterday's low. So that's the plan for the DAX. Obviously, at the moment, it's going nowhere. Feels like Christmas trading already. So I'm 100% clear. Euro yen 4 hour. the unfilled reversal alert box was a potential long reversal that never triggered. Euro yen, Aussie yen 150 ADR. So this here, yeah, that's the support rectangle, yeah. So basically, the way that the market reversal alerts indicator works is all trading is a battle between buyers and sellers. Yeah. So either the buyers are going to take control of the market or the sellers are going to take control of the market. Until that situation changes, you are going in one direction. Yeah. So here, the buyers started to try a rally. So what the indicator does is it goes, we had buyers enter here, buyers enter, buyers enter, buyers enter. Yeah. And then sellers took control of the market and broke that low. So what we're saying is, for us to be bullish in this market, these buyers that failed have to take back control of this market, i.e. we have to break that high where the sellers took control. So that support rectangle is basically seller support. If we break that, the sellers have lost control, we're going long. Yeah. So that's basically the logic, is we're looking at the buys and the sells, and we're seeing who's in control. At the moment, the sellers are in control. So if the buyers, so if this now puts in a green candle, i.e. we put a higher high in there, yeah, and then we break and make another new low, those buyers are the ones that we need to pay attention to. So the support rectangle will move down onto that last green candle, showing that this is where the last buying action was. If we are going to go long, we need to break that high, yeah, which is what a reversal alert is. It's reversing. It's showing that these guys have now got control of the market back. So if you want to go long, get on board, because these guys are now pushing. That's exactly what the indicator is doing. It's just showing you who's in control of the market right now. Which is what I keep saying. When you get a reversal alert, it doesn't mean it's going up. It means that the buyers are just taking control. The next candle, the sellers can take it back. But we are looking to get into trades when our party is involved. Not just because price is going down now does not mean you go long. You wait until there's some buyers in the market, i.e. we're extended on the 4 hour. So let's drop down to a lower time frame and wait for these buyers. This is what H4M5 or H4M15 is. Higher time frame extension. Buyers have started to try and buy the market. They got run over. Okay, so right, we'll wait and see if these guys can get control of the market back. If they can, we'll get on board with them. No idea if we're going to do that or that. But we do know that if we break that level where the last buying action was, there's a chance that we will get a reversal, a mean reversion, because the sellers are going to run out of steam at some point, because everybody down here that's buying at the moment is going to go, screw this, I'm not buying anymore until I can see some people on my side. Sellers will run out of people to buy from, and then they will have to get out of their positions. Profit take the sell move that they just made all the money on. And all this indicator is doing is showing you when that starts. The signal indicator, you need a condition, a market condition indicator to tell you that the condition of the market is a stretched condition. And then you need a signal indicator to tell you when you should try to get into that stretched condition to take profit on that move. Which is what mean reversion is, basically. There you go. Is there any merit leaving Hedge on overnight? I haven't found, so no. I've tested that. So in the stock index Hedge EA, there's a setting in here for closing out at a time. Yeah, close all trades at stop trading time. If you set that to false, it basically won't get out of the trades. It won't get out at a specific time. So the only reason that input's in there, I would never say to leave that as false. Leave it as true. In fact, I should have removed it because it's not, you need to get out, basically. I know people will want to try it, but I've tested it thoroughly. There's no advantage to leaving overnight. Sometimes if you leave it overnight, it'll gap up and make you a profit. Sometimes you leave it overnight, it'll gap down and it will make you a hideous loss, and then it will run. It will do a gap and go, and you'll get run over unbelievably. It caused huge drawdowns. It's an intraday strategy. Yeah, we are trading opening range momentum. If there is no momentum, we get hedged. Or if there's no momentum and it just happens to go one way, we might be lucky and get a trade out. It's an intraday strategy. When the day's done, the day's done. Tomorrow's a new day. There's a lot that can happen over 24 hours. So don't hold it overnight. Also, you've got swaps. If you're trading futures as well, you can't hold overnight because it's too expensive. So it's not worth doing. If the 5 or 15-minute reversal triggers, but the 4-hour does not, is it still a buy? Yeah, I think you need to go and watch the bootcamp, Wayne. Understand the strategy, multi-time frame analysis. It's covered in this one. Yeah. As I said, you're looking for a condition and a signal. The H4 is the condition. The H4 is not the signal. The H4 is the condition. What's the chances of Euro Swiss breaking that all-time low without any pullback at all? I can't believe you're asking that question. Hang on a minute. Let me find out. $50.50. Swiss yen 200 ADR. Okay, that's a support as well. That's a monthly. It's not a very good one at all. That's a terrible monthly. That's 3 months ago's high. Completely invalid now. Look, it was an awful high anyway because that was the better one. So ignore that one. That is your last month's low. And then we've got that little dip there as well, which was that retracement bounce. So I would be interested at 225 plus today on Swiss yen. But seriously, the Euro Swiss, did you say? Yeah. I don't know, obviously. I have no idea. Could go either way. I would say normally the chances are very, very small. But that is a very, very, very old level, look. Yeah, I have to go back. That level, that orange line that I've drawn on, I have to go back. Where was it? Oh, yeah, sorry. No, it isn't that old, actually. Sorry, that's a lie. 16th of August, 2022. So it's a year or so ago. You know, we're relying on a support from that's September 2022. We're relying on a support which is over a year old. A lot has changed in a year. We've had a war kickoff, another war kickoff. You know, all sorts of stuff changing. So you know, the Euro have just announced that they are definitely dropping their rates. The market factored in 1.25% and then came out 2 days later and said, scrap that 1.5%. Yeah, they could come out next week and say, scrap that 2% because they've seen inflation dropping so fast on the Eurozone. They've got nothing to do but drop that rate. And when they drop that rate, it's going to make them less attractive to investment and it's going to drop the currency value. So it's going to decline. However, if everybody else comes out and says they're going to decline as well, they just become one of the decliners and therefore everybody's equal. So this could bounce very easily. We need some news. If you suddenly get a load of, if we get the unemployment rate drop dramatically in the US, for example, tomorrow, there's all sorts of things that could change off the back of that. They could announce different interest rate policy based off of that figure. There's all sorts of stuff that can happen. So at the moment, the Euro have announced that they are going to weaken faster than everybody else. Next week, the US and the pound could come out and say, actually, we're going to do it as well. But we're going to go in February. You're going in March. Therefore, they become weaker, which means that the Euro will pop against them. Not because the Euro's got stronger, but because the other currencies got weaker than the Euro. That means the Euro has to go up because that other currency drops faster, doesn't it? So if the Swiss suddenly came out and said, we're going to put our interest rate down by 0.75% next week, the Swiss franc will devalue at an astronomical rate. The Euro won't be any more powerful, but because the Swiss is dropping, the euro will rise against the Swiss. And it's not because the euro is strong, it's because the Swiss is getting negative, which automatically makes this chart go up, doesn't it? There's always two parties involved. So whenever you're looking at all currencies, yeah, they will all react differently. At the moment, you can see the euro is holding up against the New Zealand dollar fairly well. It's not holding up quite as well against the US. It's not holding up at all against the yen. Now, that's nothing to do with the euro. This is to do with the yen. Yeah, if that yen move hadn't happened this morning, the euro yen would be there, wouldn't it? So it's impossible to tell. Absolutely impossible to tell. But you can look at support and resistance for clues. Yeah, this is a very good support. Very good. Resistance, resistance, support again, support again. So it's been support 6 times, resistance twice. We're back there after a 175 ADR drop off the back of a, I don't know what drop. 708 pip drop, 7 ADR. So that's a 7 ADR drop in 2 weeks. Today it's done 175% drop, straight down into an area we've bought it from 6 times. Confluence, great confluence, but wait for the guys you want to take the market back. Yeah. Wait for them to show their hand. Yeah. If we are going to buy this for the 7th time, wait until they do it. Don't assume. I got taught this a long time ago. Anybody in sales will know this. Assume makes an arse of you and me. Yeah. Never assume. Wait for confirmation, because you need to be sure that you have got a chance of that working. Not, oh, it's really extended, it's going to go up. No, it's really extended, it's going down really fast. Wait for it to show that it's going to go up again, which is what the reverse alert indicator is all about. DMC, just came across your content, think it's brilliant, cool. Keep watching then. I was thinking more if you are hedged on, say, the DAX and then you don't see an out, just leave the hedge trade on overnight. Yeah, you can do that if you want to, but if it gaps down by 1 ADR, don't come crying to me because you've just lost 5R in a candle. Yeah, that's the danger, JC. If you leave it on overnight and it gaps big, you will lose big, especially if it does a gap and go. Yeah, look at the gap and go on the DAX here. Yeah, if you were hedged on this and you left it hedged overnight, down here, this gapped up. An ADR, 1 ADR, it gapped, and then it went, and it hasn't come back. Here, we gapped up by about 1/4 of an ADR and put an ADR move in plus. Yeah, these gap and goes don't happen very often. When they do happen, you will lose a month or 2 months worth of profit because you won't get out of that. The EA will close your longs. Don't forget you've got long targets and short targets in the market. If it gaps above your long target, your broker will close out your long target up there. And if it goes, that short is going to go into, first of all, 1 ADR more drawdown than you wanted it to, and then it's going to run an ADR against you. That's a 20 grand loss. Or whatever it is, whatever percentage. It's a massive, massive loss. It's just not worth doing. I tested it. It's just not. It will help you a number of occasions. On the occasions it doesn't, it will outweigh the ones that it does. So, AZ, I was asking sarcastically, it has to pull back. Yes. Euro Swiss. It has to pull back. And this is the thing, it has to pull back at some point. But if people are willing to keep buying this, look at the sentiment on it. Euro Swiss, where are we? Going to be down the bottom, isn't it? Euro Swiss, 93% of retail are long Euro Swiss at the moment. Yeah, as long as they're long, they are providing downside liquidity for the banks and institutions to use to drive the market lower. Yeah, as long as they're going long, this is going to go short. because there's liquidity there. And remember I said, when big moves end with a big spike, typically. This is why we get hammers and shooting stars. This is the market hunting liquidity. If it can't find it, it has to go further to find it. If it can't find it, it goes further. If it can't find it, it goes further. And it gets to a point where it goes, there's nobody left. Right. Flip direction. All the time there's people wanting to buy this, they're going to provide downside liquidity. So it can keep going as long as it needs to. And all it's going to take is Lagarde to come out and say, yeah, we're going to definitely reduce rates. We said March. Looking at this interest rate figure now, the inflation figure now, I think we might be looking at even February. It's going to go further. It's not going to stop, especially in Christmas when we've got light liquidity, because they have to go further to find it, which means you get bigger candles, which is why I'm trying to get flat on everything, because it's not fun trading in the run up to Christmas. EuroCAD's pushing at the moment. I need a 120. Excuse me. We need a 125 ADR on this to get out. I really need that non-farm payroll figure tomorrow to come out negative. I need the unemployment figures to have gone up, because that will weaken the US and the CAD. And ideally, I want oil to drop further. That would help me a lot as well, but we'll see. Peter, can you show how your other strategies are doing on the VPS? Can do. I haven't looked. No idea. I'll wait for that to boot up because it takes half an hour. Wayne, I promise I did watch the bootcamp. Apologies for some time asking basic questions. I'm much happier hearing you confirm stuff live. That's all right. Yeah, basically H4 M5 or H4 M15 or H1 M5. It doesn't matter what. It's basically two time frames, multi-time frame analysis. You're using the higher time frame to identify a stretched market condition. You're using the lower time frame to enter on a reversal. You can use the same time frame. The problem with this is, look at oil here, yeah? We've got an RSI extension on the hourly time frame. So this is extended to the downside. So we're looking for a pullback. Look at where the reversal alert is. By the time you've got that reversal alert, you've missed 125 ADR of movement. On the lower time frame, what you should be looking at is targeting that as your target to the upside. So if you're going to get into this, you need to get into it faster, which is why you drop to a lower time frame once you've identified a stretched condition, and you wait for the market to go long. That's where you enter. Now you can target that 125 move, and that's your profit. So that's what multi-time frame analysis is. You're looking for a setup on the high time frame, and you're looking to get into the move on a low time frame. Because usually, and this is where trend trading doesn't work, and why trend trading doesn't work, because by the time you've identified a trend, like we've pushed down, we've pulled up, we've pushed down, we've made a new low. Okay, I'm going to get in on it. Yeah. If you're lucky, you'll get that before the trend ends. You've missed it. There was the move. You missed it. You got in at the end. So that massive move there is likely to have a pullback to either there, or maybe even up there. But if you get in on the move there, you've missed half the move, or maybe even all the move if all it's going to do is that, which is why you identify the condition on the high time frame and you trade the lower. DAX is made a new low in the session. Still haven't broken the pre-market low though yet. Not gone anywhere. VPS. So ADR reversals has done so far 1.96% this month, sitting in 5% of drawdown. Euro Swiss, the main culprit. That's my account. Mean reversion H4, H4M5, H4M15, 2.26% down, 8.6% drawdown at the moment. Not doing very well, that one. However, there's nothing particularly worrying there. Euro pound is in 2%, Euro Swiss is in 1.5%, Euro yen 1.7%, but there's nothing, there's nothing huge in drawdown, is there? It's, you want to start looking at aggressive drawdown control on these. Don't forget, this is not doing aggressive drawdown control. It's doing normal drawdown control. It's not looking at aggressive drawdown control at all. It's not being traded. It's just on full auto. So it's not doing it properly. It's just doing what it's told to do. That's why it's in problems, because obviously it got in on the first extensions on the euro. Then they announced on the CPI figures the rate drops, which are coming. So yeah, it's overexposed on the currency that's had a fundamental shift. Nothing you can do about that. But wait, H1 hedging last month, look, 7% down, 24% drawdown. So that's normal. The hedging set file, totally normal to be in 15 to 30% of drawdown. That's where it lives, but it's not had a good month yet. That will turn around in 48 hours when some of these mean reversions kick in. There's a couple in big drawdown there, both yens, which you'd expect today, obviously. They'll have only gone into drawdown today. Euro New Zealand as well is in 2%, which isn't too bad. But yeah, but that's coming off the back of a 47% gain last month. So net over the 2 months, we're 40% up. So, but it's going to have bad ones, on squeezes. But that's good. It's not the whole purpose of this set file was to demonstrate or to test, forward test, drawdown, proper drawdown, open drawdown, which you can't do in MT4 without visually testing it. And, this has been running now since April, something like that. Hasn't blown the account by any shape or form, and it's making, it's done $135,000 profit. So 135% increase on account in less than a year, with round about 40% drawdown was maximum it got into, wasn't it? So absolutely killing it. Far too rich for my blood, though. Too scary for me. But it works. Works beautifully. Which is why I'm looking into hedging strategies at the moment, because that's proven to me that hedging has got an edge. Which I kind of know it has, because a lot of firms use it. But if you can set something just to get in, all that's doing, that set file, is literally every H1 reversal alert, it just goes long. And it waits for a short, and it just goes short. And it just keeps going long and short. And it just extracts money out of the market. And if it gets into a squeeze, it scales out, scales back in. And that's literally all it's doing. It's just blindly taking every reversal alert. And it's produced 135% in less than a year. But on a massive, massive drawdown. So if that set file, that strategy is the sort of strategy you basically have to go and put X into an account, set it up, and just shut your eyes and not look at it. Because if you look at it, it'll scare the crap out of you. However, if you don't look at it, you'll come back in a year and you go, wow. But it's not for the faint-hearted. There's a few people trading it in Telegram at the moment and killing it, but killing it in scariness. You can shut all that out anytime. That 20% drawdown, you can just shut that anytime you like. And just go, bad enough, and walk away with a lovely profit. But too risky for me. Morning, Sagar. Any plans on writing a book? Nope. There's no point in writing a book. It's on YouTube. Watch it. It would take me so long to write a book. It's all on YouTube. The problem with writing books is as soon as you write a book, it's available to everybody free as a PDF. So the only reason to write a book is to make money, as far as I'm concerned. And I'm not in it to make money from education. It's just not, I have no interest in doing that. So if I wanted to make money in that way, it doesn't matter how you put your education out there. If you produce a video course, within a week, it's copied and it's out there for free. If you produce a book within a week, it's a PDF. Yeah. There's no point in doing anything for money in that respect, because it's too easy to pirate everything, isn't it? So it's just not of interest, and it would take up so much time. I'd much rather spend my time finding new ways of extracting money to put out there so that people can choose how they want to extract money. That's a better investment as far as I'm concerned. Morning, Potgaiter. Give more likes, hit the thumbs up. Anton Creel released a new video recently talking about how they trade. They talk about producing X return while sitting up to 20% volatility, which means up to 20% drawdown. Yeah. This is what I keep saying. People are scared of drawdown. They shouldn't be scared of drawdown. Drawdown is your account, your business. This is what your job is to use your capital, draw down into that capital to return an investment. It's the same as any business. You go and set up a shop on a high street. It's going to cost you 100,000 to get the rent for that shop, to fit that shop up, to buy the stock, to get the staff, to pay the rates, It's going to cost you 100 grand. So you're going to need a 200 grand account. You're going to draw down into it by 50%, and you're going to use that drawdown to generate revenue. If you've got a $100,000 trading account, you can draw down into that 20 to 30% to produce alpha revenue. Yeah, that has been produced by drawing down into my money. Why is everybody scared about going into drawdown? It's your job. Risk. You're a risk manager. Take risks. Pension funds, hedge funds, regularly going to 15, 20, 25% drawdown on the fund while they're waiting for these moves to play out. That's how they make their money. Anton Creel is an ex-banker. He's run hedge funds. He's run dealing desks in banks. That's why he does what he does. Learn a lot from him. 20% volatility is 20% of drawdown. That hedging set file I just shown you that's done 135% return has done it by drawing down into that revenue by 20 to 30% on a regular basis to produce 135% increase. That's how it works. This is why everybody using the stop loss is getting slaughtered. And everybody position trading isn't getting slaughtered because they're using the market movement to make money. Everyone else is trying to catch the top and the bottom of a move. Impossible. It's possible to know that that's going to do that, but it's not possible to know if it's going to do it there, or there. So if you're trying to pick one of those circles, you're going to get killed. If you're trying to pick the fact that it will revert, it will. Show me something that has never done it. You can't, because it has every time, always. That move reverted. 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 That entire move will revert. That one will revert. Yeah, that one reverted. That one reverted. Just does it. There is no way it can't do it, because the only way that anyone can make money is by it going the opposite direction, because if you're long, you have to go short to get out. It's physically impossible for it not to revert. Banks and institutions cannot hold positions for more than a quarter without having to take profit on it, because they don't get paid otherwise, which is why we use the 24/72 moving averages, which is the monthly and the quarterly movements, so that we can see where the moves are. This is the banks taking profit on those moves. But this, if a bank is going the other way, is the drawdown into account. Obviously, you've got to manage it, and you're going to get it wrong. Yeah, everybody gets it wrong. Banks get it wrong. Banks, don't forget, banks and institutions, when you're driving money, they're all against each other, because if they all went the same way at the same time, they wouldn't be able to get the other side of the position on, would they? So there's always one bank that's going to be in an advantage against another bank on any position. Otherwise, it won't move up and down, because you've got to have people, when you want to buy, to sell to you. And if you want to sell, you need to buy from someone. But at some point, you're going to buy so much that you're going to go, I need to get out of this, and you're going to sell it back to the person you bought it from or to another institution. Market structure. Anton's got his head screwed on, but that's only because he's been there and done it. Which is why he charges you around about £5,000 to £10,000 for his education. He also said in the video that when he was at Goldman's, if you booked a loss, you'd be in a lot of trouble. Yeah, your job is to bank every day. Yeah, it is your job to bank every day on your portfolio. When, you know, look at my portfolio. How often do I not bank? Not often. My job is to bank every day and manage my risk. That's it. But yeah, go and watch Anton Kriel's stuff is all very, very good. But you need an economics degree to understand it. What's my RSI setting? I use a 14 on the 4 hour and the 21 on the hourly. But it doesn't matter. Use any one you like. The odds of it working are the same as mine, whichever one you use. I'm just adjusting trade over here. Going out the way. Right, that's all I've got for you this morning. So DAX today, basically, we haven't gone anywhere yet. So we've just tapped into pre-market low. We're holding there. So I'm watching this area here, which is basically it's that propulsion gap, which is 2.5 to 3R roughly. The speed this is moving today, it's going to be very difficult, I think, to get out of it unless it speeds up a little bit. But that's what I'm going to do. I'm going to watch that area for a bounce to the downside. If it pushes back up again, obviously, that is what I would be looking at. But I'm not going to adjust my TPs on it because I don't want to get taken out. If we get an aggressive move for any reason, I don't want to get taken out. What slightly worries me about today is the fact that this yen has moved so far and so aggressively. If this starts to pull back dramatically, we might get a lot of this yen moving into the US dollar, which will move the US indices, which will move the DAX. So I just want to, I don't want to stick hard TPs in. I'm going to monitor it. But if you want to, there's nothing wrong with sticking a TP down there. Just move those up to get out automatically there and try and get out on a pullback. There's not a lot you can do today. It's not moving. So we will see how we get on this afternoon in the US session. So this afternoon, obviously, you need to be aware of the unemployment claims before the market open. 1:30, it's an hour before market open. We've got unemployment. We might get some movement off of that. We didn't get a lot of movement yesterday off of that. That figure will probably come out quite similar. So I'm not expecting massive moves today. I think it's going to be one of those days where we're sitting waiting for non-farm. And obviously the fact that the yen has done what it's done, it means no one's going to want to trade anything else today because they're focusing on the yen. So everything else is just going to amble along. Wayne, I met Anton Kriel a few times back in the day when he did some free seminars. Got hammered in a pub off Oxford Street with him. He could drink. Yeah, he looks like he could drink. He's a banker. All bankers can drink. That's their job. They go and do banking and then they go to the pub every night or to strip clubs, etc., wherever they go. Got to pay for your Ferrari somehow. But yeah, I think he'd be an interesting person to go out for a drink with. But I don't think you'd be able to keep up with him. I think I'd be able to keep up with him. Right, I'll leave it there. Anything you need, let me know. I'll be in Telegram. Watch these yens. They are starting to pull back a little bit. So you might find you're going to get some reversal alerts on these. There you go. You just had one on the yen. So to be safe, I'd, maybe wait for a W pattern confirmation. But there is a reversal alert. It is 200 ADR. That is very stretched. So, if you just go for a 50% retracement on it, you're looking at 3/4 of an ADR or more, aren't you, on some of these moves? So there's a lot of profit to be had on these yens today if you want to scalp them. Just be careful, though. This is this could just flag. Although at 200 ADR, I'd be surprised, but The market can surprise you more and longer than you can stay solvent. So be aware. All right, have a good one. I'll be back this afternoon at 2:20 for the New York session. Back tomorrow morning, 7:50 for Frankfurt, as usual. Be in Telegram until then. Anything else you need, let me know. Have a good morning.